What if GameStop goes to the moon? GameStop has taken Wall Street by storm again. The stock price has started soaring to incredible heights, catching everyone's attention. Communities on social platforms have banded together, challenging the professional traders, and they are winning. But according to Dan Raju, the CEO of cloud-based financial services provider Tradier, the recent meme stock surge that caused GameStop Corp shares to skyrocket once more is driven by baseless speculation and speculative resonance. Could he be wrong again? What happens if GameStop keeps climbing? How did it start? In early 2021, millions of ordinary people across the United States began buying shares of the struggling video game retailer GameStop. They invested in amounts ranging from tens to thousands of dollars. Financial experts mocked these investments, pointing to GameStop's poor financial health. Despite this, the collective effort of these investors had a powerful impact. They drove GameStop's stock price from under $3 to as high as $483 in late January 2021. This unexpected surge caused significant losses for hedge funds that had bet against the company. Nearly 3 years later, a new movie titled Dumb Money aims to dramatize and explain this unusual event. Paul Dano stars as Keith Gill, a trader and live streamer whose enthusiastic support for GameStop on the subreddit Wall Street Bets sparked a movement around meme stocks. These are stocks that gain popularity and surge in price primarily due to social media buzz. The movie also features Seth Rogen, Pete Davidson, and America Ferrera, playing characters who get caught up in the frenzy that gripped market watchers during the pandemic. Dumb Money presents the GameStop phenomenon as a pivotal moment in American finance. It shows how everyday people, known as retail investors, managed to challenge the powerful Wall Street institutions and assert their influence in the financial world. Writers Lauren Shooker Bloom and Rebecca Angelo told Time that they were drawn to Keith Gill's story because it was such an anomaly. They explained that retail traders usually perform worse than the big hedge funds. By highlighting this unique event, they hope to shed light on how the financial system typically operates and why it needs scrutiny. The GameStop craze changed many aspects of investing and financial literacy. Experts say its long-term impact is still unfolding. Kyla Scanlon, an economics analyst and content creator, mentioned that despite the initial success, many retail investors ultimately faced challenges. She noted, "It's very hard to beat the stock market. But could GameStop prove them wrong again? We will find out." So who is Keith Gill? Keith Patrick Gill is a financial analyst turned social media influencer who has gained a massive following among retail investors. On YouTube, he is known as Roaring Kitty, and on Reddit, he goes by Deep of Value. Gill recently reignited investor interest in GameStop with a cryptic post on X. The post featured an image of a sketched man leaning forward in a chair, which many interpreted as a sign of his return to the investing world after a 3-year break. Following this post, Gill shared a series of comeback-themed music and movie clips. These posts were enough to cause GameStop shares to surge from $22.91 at the end of May to $32.80 by the following Monday. His influence on GameStop stock has become so significant that E*Trade is reportedly considering banning him from their trading platform, according to the Wall Street Journal. Keith Gill was born in Massachusetts in 1986 and grew up in Brockton with 2 siblings. He attended Stonehill College, where he was a standout track athlete, and earned a business degree in 2009. In 2021, Gill testified at a congressional hearing about the meme stock phenomenon. During his testimony, he shared that he was the first member of his immediate family to earn a college degree. He is married and has 1 child. Gill's rise to fame began with his in-depth analysis of GameStop on social media platforms. His posts on Reddit's Wall Street Bets community and his YouTube channel attracted a large audience of retail investors. They were drawn to his thorough research and confident investment strategies. This grassroots movement led to a significant surge in GameStop's stock price. What is the meme stock craze? The meme stock craze began during the pandemic when retail investors on the Reddit forum Wall Street Bets started buying shares of struggling companies. These companies included GameStop, AMC, Bed Bath & Beyond, and BlackBerry. Investors on this forum coined the term meme stocks for these companies and popularized the phrase "to the moon" to express their hopes for skyrocketing stock prices. In the early days of this craze, some investors aimed to disrupt hedge funds and institutional investors who had bet against companies like GameStop and AMC. These professional investors had taken short positions, meaning they would profit if the stock prices fell. By driving up the prices, the retail investors caused significant losses for these hedge funds. However, Keith Gill denied that his motivation was to punish Wall Street. He explained his actions during a congressional hearing in 2021. Gill said he was aware that Michael Burry, a well-known investor, had shown interest in GameStop. Believing the stock was undervalued, Gill purchased call options on June 7, 2019, and continued to increase his position throughout 2019 and 2020. His ongoing analysis of the company led him to believe that GameStop's share price was indeed dramatically undervalued. Does Keith Gill have a deeper connection with GameStop? After working with a startup in New Hampshire, Keith Gill returned to Massachusetts and started a career in financial services. He became a chartered financial analyst and a licensed securities broker, which eventually led him to a job at MassMutual in 2019. According to Reuters, he left the firm in 2021. In 2020, Gill began growing his online presence by encouraging people to invest in GameStop, a company whose shares he had started buying the previous year. He used Reddit discussion boards and YouTube to share his insights on financial markets and undervalued stocks. He posted videos during a time when many Americans were stuck at home due to the pandemic. In his testimony before the House Financial Services Committee in 2021, Gill explained his belief that GameStop was significantly undervalued. "I believe the company was dramatically undervalued by the market," he said. "The prevailing analysis about GameStop's impending doom was simply wrong." Although Gill made substantial profits, he also faced significant losses. In 2021, he revealed that he had lost $13 million in a single day from his investments in the game retailer. What's GameStop's performance as a company? In recent years, GameStop has faced declining sales as the video game industry shifts towards streaming and digital downloads. The company struggled financially, posting 7 straight quarterly losses before finally reporting a profit in its most recent quarter. In March 2023, with support from meme stock investors, GameStop achieved its first profit in 2 years. Cost-cutting measures also helped the company conserve cash and provided more time to explore new growth opportunities, according to analysts. Despite this short-term success, GameStop still faces significant challenges due to the ongoing changes in the gaming industry. For the 2023 fiscal year, GameStop reported $5.2 billion in revenue, down from $5.9 billion the previous year. In a regulatory filing last month, the company announced it had sold 45 million new shares, raising approximately $933.4 million in fresh capital. This move aims to strengthen the company's financial position and support future initiatives. As of February, GameStop operated 4,169 stores worldwide, with 2,915 of them in the U.S. last fall. The company appointed Ryan Cohen, the founder of Chewy, as its new CEO. Cohen's leadership is expected to bring fresh perspectives and strategies to help navigate the company's ongoing transformation. Is buying GameStop stock a good idea? Could we get GameStop to $1,000 in the future? After many ordinary people reportedly made substantial profits from GameStop, the idea of striking it rich in the stock market became enticing, especially for high school and college students. However, is it likely that GameStop stocks will see another meteoric rise? It's also debatable whether it was ever a good idea for people to buy them in the first place. Whether to buy a stock is a question best answered by qualified financial advisors. However, there are a few main points that students and new investors should keep in mind. Be cautious about where you get advice online. The GameStop Reddit Wall Street event was fueled by online forums. In this forum, users often treat investing like gambling and encourage making YOLO bets. Risky moves like spending your entire life savings on a single stock in a win-it-all, lose-it-all gamble. Don't spend money you don't have. When investing in stocks, the worst-case scenario is losing your initial investment. This can be devastating if you haven't carefully considered whether you can afford to lose that money. Making back your initial investment is never guaranteed, so you should only invest money you can afford to lose. What was the point of it all? Yes, that's a good question. For many people involved, it was just for fun and excitement. It was something to pass the time, and an experiment to test the power of internet communities. Wall Street commentators called it a phenomenon, insane, and unlike anything they had ever seen. For many retail investors, the goal was to make stockbrokers and hedge funds lose money. Popular threads on Reddit featured people claiming it was payback, a form of revenge against the big financial companies blamed for the 2008 financial crash. Analyst Neil Wilson described some traders as having a peculiar vigilante morality. They seemed determined to take on Wall Street, with a strong dislike for hedge funds. Threads were filled with insults about boomer money. It was a generational fight, aiming to redistribute wealth from the rich to the millennial poor. Some people on the forum even said they donated their earnings to charity afterward. In the end, if nothing else, it was a chance to create and share memes, a sign of humor and camaraderie to the whole experience. Do you think GameStop can make a comeback? Let us know in the comments. Thanks for watching and, as always, don't forget to like, share, and subscribe. See you next time.